Hello and welcome to Business Television India. I'm Piyush Jain and joining us on Market Guru today is Chakri Lokapriya, CIO and MD at TCG Advisory Services. Mr. Lokapriya, welcome to the show. A lot of things has happened since the last time we were interacting. Markets have gone up and between the last 2 days, the banks actually have rallied a lot. So my first question to you would be, what's your take on the entire PSU bank re-rating story which is getting played out after the government announcement? And do you believe that the growth trajectory is looking now much brighter, or there is still a lot of capital requirement which is still pending?
I think the government has done a very good job finally in terms of announcing both a recapitalization of PSU banks and plus at the same time announcing the Bharat Mala to construct roads and various infra projects. So on one hand, the recapitalization cleans up, provides capital, allows banks to take haircuts on stressed out loans. As a result, NPAs goes out, clears up some amount of space for the banks to go out and do some fresh lending. And they can lend to these Bharat Mala companies, the EPC companies, who are going to build these roads, bridges, and dams. So from that perspective, it is indeed a well thought out plan, and I think it will do well.
So then the question comes here is like, there are a lot of banks here. Some banks basically, they would be having more than 10% NPAs or gross NPAs. But then there would be top tier banks like SBI or Bank of Baroda or PNB, which actually are rallying quite smartly. What would be your top picks within the PSU banking space?
In spite of the rally, if you look at an SBI or a Canara Bank or even a Union Bank for that matter, all these banks are still trading at 0.6 times, 0.7 times book value, and adjusted book value is probably slightly higher. Now, and this is before the capital infusion. So once the capital infusion happens, some of the stressed NPAs goes down, and as a result of which credit growth picks up, allows these banks to do fresh capital QIP raisings, FPO raisings, and therefore I think we see significant upside from even the current levels.
So if there is material upside from the current levels, there will be two questions here. One is with respect to the book value, how comfortable you are. Number two would be that at present, a lot of money which the government is going to give is also going to be utilized in cleaning up the balance sheet. So a lot of provisioning will be done, and then also you basically have to also boost up your capital adequacy. So with respect to that, what's your own assessment? Like how much capital would still be available for credit growth? And as in your top picks, are those banks basically in a better position to utilize the credit?
Our top picks are clearly better positioned. If you take SBI as an example, SBI doesn't really need capital for the next 2 years. And if it does, it will have sufficient access because it recently did a qualified institutional placement of 15,000 crores.
And it was a very strong, demand.
And a very strong demand. And now with this capital infusion, it'll allow the company to take a fresh round of capital if needed 2 years later, about a year and a half later maybe, to fund additional new loan growth. And similar stories will be spread across the other major banks. Of course, Union Bank is a far more stressed out bank. It'll need a greater capital infusion. It's also reflected in its lower book values. So in these kind of scenarios, there will be haircuts, which will allow some NPAs to be reclassified as performing loans.
Right. So SBI, I can understand, as you were saying, I think the best in class PSU bank. But in terms of Canara Bank and Union Bank, why basically you like these banks? And as you were just highlighting, the Union Bank is a more basically a bank which has more stressed assets. So what's your own assessment in terms of after fulfilling the provisioning requirement, will these banks actually be able to fulfill the credit growth? Because private banks like HDFC Bank or Axis Bank, or in fact IndusInd, Yes Bank, they all actually have been gaining market share. And the other theory has been over the last 12 18 months that NBFCs, they also were gaining market share, primarily because the PSU banks were not able to have that sort of credit actually to lend out. So what's your assessment in terms of strength of Canara Bank and Union Bank?
Good questions. In terms of NBFCs have gained market share at the expense of PSUs. PSUs were stuck in the self-fulfilling cyclical story of having higher NPAs, therefore high provisioning, which lowers the capital that they can give out to lending, create for new loan growth. whereas that cycle, negative cycle, will now be broken with the capital infusion. It allows them to take some haircuts, more shallower haircuts than previously. And this will allow them to raise. Now, for example, Union Bank roughly needs about 5,000 crores of additional capital infusion over the next couple of years. Now, with some coming from in the form of recapitalization, some amount it would now go out and do a qualified institutional placement or an FPO. And government holdings in these companies is still very high. It's well north of 50%. So the government can afford to allow these banks to do QIPs and still hold majority stakes in these banks.
But just one small question here. Is there any particular reason apart from the book value where you'd be preferring Union Bank over Bank of Baroda or PNB? Like the street estimates for PNB and Bank of Baroda are more bullish than these two stocks. And that's why actually it could be more interesting for our viewers that why actually you would be liking these two banks more.
You know, it's more a question of trying to choose the larger PSUs versus the smaller PSUs. And Canara Bank, BOB, Union Bank, SBI, of course SBI is the largest, these are amongst the top 5 or 6 banks. I think if you focus on the top 5 or 6 and not focus on the rest, at least that's what we are doing, there's sufficient room for upside and because of the repair that you will see in these top 5, 6 banks. PSU banks, that is.
Fair enough. So in banks, what you're saying is that recapitalization is good move. SBI, Canara Bank, Union Bank, those again are looking good in terms of your top picks. Another important announcement, Bharatmala. A lot of infrastructure spending on the line in terms of the next 4 or 5 years. And also track electrification, that is also generating good amount of orders for the capital goods stocks. So what is your assessment about the infra spending, the infra order book, and also what would be your top picks in that space?
You know, Bharatmala will do lots of good things to the whole infra sector, which is Larsen Tuber, of course, is the largest player, will also be the biggest beneficiary. And you will see a number of EPC companies benefiting from this. L&T itself is an EPC company, EPC division as well. And you will see that, you know, because the NHAI and the roads departments have changed the funding formula, you will see a greater amount of lesser upfront spending needed by the EPC companies than in the previous models. So there's a less balance sheet strain on these corporates, which has been the issue, which was partly the reasons why NPAs were created to begin with in the first place. And second, in the probably by next year, within the next 12 months, less than 12 months, more than 10,000 kilometers will be started and executed. So this creates a lot of jobs. L&T is one company. Skipper is another company where the country is saying, or the Modi is saying about power for all, and transmission towers play a big role here.
Right, then the question comes is that if you're talking about the infra stocks here, L&T, Skipper, Sadbhav also, you like that stock also. L&T, we know that, the largest of the lot, in fact in the recent track electrification orders, more than 30% market share in terms of order wins in the first half. So that's the positive sentiment going along. The stock is also actually gaining quite smartly over the last 1 week. What's actually in store for Sadbhav and Skipper versus the other competitors, and why actually you like them? Is it valuation, or you think there is some significant order win story which could be playing out?
You know, valuations are less important for the sector at this point in time. Having said that, they're not that expensive either. If you take Skipper as an example, Skipper's 80% of its business comes from transmission towers. And now there is this huge push of power for all. And so even if some portion of it translates into order books, that would translate into higher revenue growth and therefore EPS growth. They're trading at undemanding valuations because of low earnings to begin with. So most important here is to focus on order book accelerations, which is what we think we will see. And Sadbhav is amongst the better well-placed players, stronger players in this space.
But then do you believe that at present the order activity is actually happening in line with expectations, or you think that government spending, which was slowing down in the second quarter, should be picking up in the second half? Because first quarter, we started with very high expectations that a lot of orders are going to come this time in the first half. But after the first quarter, second quarter became slightly lower on the order activity. And then now, but interestingly, the stocks have started outperforming the second quarter. So, what's your own assessment here?
You're absolutely right in the sense that order activity has slowed down significantly. If you just take NHAI order, there's hardly been new order activity. Now, I think the government is doing a good job there, Gadkari, in clearing out some well-known bottlenecks of land acquisition, which is crucial for this for road laying. So some of these roadblocks being removed, and also the business model moving to a less upfront payment, which creates long working cycles for these companies. That problem has been addressed, or rather is being addressed. So this will translate into, with this newfound thrust of Bharatmala, into greater number of new order wins.
Right. And just one question more around the Sadbhav also. I believe you're talking about Sadbhav Infra, right, Mr. Lokapriya? So when we're talking about that, what's your own assessment about the historical track record of the company in terms of book value, in terms of provisioning, which it had done over the last 2-3 years? And is the company now firmly on a recovery path here?
It is indeed. It's well-known problems that the company has faced because of slowing economy is a big reason, and also stuck order books, non-execution of projects because of things beyond their control has led to the current state of affairs, and it has led to an increased amount of provisioning as a result. And this again goes back to your bank NPA problems, because bank NPAs are nothing but the NPAs, the problems that corporates are facing. So as corporates are recapitalized and are capitalized, you will see an increased activity, and that's what we expect from.
But the reason why I'm asking you, there is low interest coverage ratio here. The return on equity has not been great for the last 3 years. And again, if you look in terms of results, again, net profit, basically, there has been losses across the last 3 or 4 quarters. So it is very sure that what you're saying is there is a recovery path here. So are we playing out on basically operating leverage or sort of balance sheet deleveraging here, which is happening here?
Deleveraging of balance sheet is going to be a very important buzzword, I think, for the next couple of years. And just like you talked about recapitalization of banks, which is what? Which is basically fresh infusion of capital into the banks. The same way, the capitalizing companies, capitalizing corporates is going to be a key word, because you have several good companies out there who got stuck because of economic slowdown for various well-known factors. Now, if you provide them with the growth capital, they will come out of that and deliver strong earnings growth in the coming years. And that's the premise, rather.
Right. So infrastructure, L&T, Sadbhav, and Skipper is what actually Mr. Lokapriya likes in the infrastructure sector. Let me talk about chemicals here. Last time we talked about stocks, Akshar Chemical, Philatex Industries, and those stocks basically have done well so far. What's your assessment right now about in terms of their growth prospects? And also, in particular, I believe you also like Aarti Industries. So how's the rationale, how's the valuation and growth story looking like? Because I just remember over the last 1 or 2 weeks, we also heard some new development coming out from China, where actually they have gone now aggressive in terms of basically shutting down factories, try to improve the quality of air. So some new actually shutdown initiatives, those actually have been initiated. And this was the first wave for actually increase in chemical prices when the first time it happened. So is there any sort of tailwinds here which are still emerging out?
2 or 3 things are happening because why we like this industry. One is, of course, you have a global economic recovery. US economy is very strong, advanced Europe is very strong, Japan is strong. China is cutting down on its polluting industries, a big manufacturer of various chemicals. So this has led to 2 things. One is because of higher US GDP growth has led to higher revenue growth. And it is also leading to higher pricing power for these companies because China is cutting down on its production. Now, against this backdrop, we expect, for example, Aarti Industries, which exports more than 50% of its total revenue comes from exports. It's doing a capacity expansion that should come on stream in a couple of months, in a quarter or so. When that happens, you will see now capex is done, revenues, therefore higher profitability, should be able to grow 20, 30, 25% plus EPS, or stronger than that, for very undemanding valuations. And usually exports, and in terms of a cyclical recovery, last for a long time.
Right. So if you're saying 25-30% earnings growth, the stock is still trading at 25 times trailing PE, which is almost like 1 times PEJ. So valuations are looking quite reasonable, as you're saying. The stock actually has rallied from 300 rupees in 2014 to now almost 900 or 900 plus. So 3 years, the stock basically has moved from 300 to 900. What do you think, if a 25% earnings growth story is there, how far the stock can go?
I mean, well, if you look into the future, and the company is going to grow 25-30% plus, and its forward PEs are probably 15 times, there's more than sufficient that it can grow into its earnings growth rate over the next few years. So from that perspective, the stock makes 20-25% returns CAGR over the next few years.
Right. So both on the volume play also and on the valuation play also.
Valuation play also.
Let's also talk about the space which you also like. It's the paint space again. A consumption story, a story where basically we have seen Asian Paints, Kansai, Narolac, Berger Paints, all basically companies, they have been relatively doing quite well. Profits have been increasing. What's your assessment firstly about the sector margins right now? Have we seen the peak of the margins, and do you believe that the volume growth basically is the main point where everybody should be focused on?
Paint, all the names that you mentioned, Kansai, Asian, and even the smaller players like AkzoNobel. Now, Kansai Nerolac continues to do well. We like the company because it has exposure to both industrial as well as residential paints as a segment. And also with Modi's Housing for All, companies like AkzoNobel, which are also expanding into the new segment of mass housing.
Thanks a lot, Mr. Lokapriya, for all the stock picks. And very quickly, what Mr. Lokapriya has highlighted, Kansai, Nerolac, AkzoNobel in the paint space as the top picks. He also likes Aarti Industries, Skipper, Sadbhav Infra, Larsen Toubro. In PSU banks, which is the buzzing sector, SBI, Canara Bank and Union Bank are his top picks. And lastly, Epco Tax Industries, very interesting stock. SL Propack and JK Tires are all the stocks we have talked about. With that, it's a wrap on this edition of Market Guru. From the entire team here, thank you for watching us.